Good morning, friends and traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast and beginning of the week for Monday, March the 16th. Very short pre-market forecast this morning. Essentially, the market has limited down, which essentially means it's reached the bottom where essentially cannot trade any longer because of the huge drop. The Dow is down about 4.5%. The S&P is down. The Dow is down 1,000 points, 1,041 points this morning, at over 4.5%. So they've actually limited down. Friends, there is no remedy in sight right now for this market. I think it's a very fluid situation, and I think the Fed and the federal government and the Federal Reserve are trying to throw as much as they can at this market without really understanding the implications of it. And I think yesterday's reduction in the interest rates hasn't really helped the market. I think the world economy, which is kind of soft to begin with, has taken a big hit. Here in the States, our economy is still strong, but we're still going to start seeing some of the effects of this slowdown. I'm not really sure if we're really entering a recession yet. This is hard to tell, because the economic data here in the States is so strong. But here's where we find ourselves, friend. And remember, I talked to you about this bottom here, which was the bottom established here at the end of December when we began to rally all the way to the all-time highs. That's the next level of support. After that, friends, this if you think it's ugly now, this can get even worse. So my suggestion to you guys is, especially if you're a retail trader, is just stay out of this market. Just basically stay out of this market. Wait till things settle down. It's going to find a bottom. It's going to start to move probably laterally for a little bit. Then it's going to find its legs again. But the types of volumes and movements and swings that we've been having in this particular market, the S&P market, and in the other indices are it's incredible. There has been a few really great opportunities, but the effectivity is lower. The effective rate of your trades are lower because of the huge swings. But the good thing, it doesn't take very many trades to stay blocked. So that's the good thing. Not the kind of markets that I personally like to trade. So I've decided to pretty much sit this out. I am not going to start speculating within this markets, and that's my suggestion to you. Obviously, you do what you want, but that's what I'm suggesting. So between coronavirus and the soft economies of Europe, I think this is going to be around for a little while. It may take a couple of months, 3, 4, 5 months. We don't know, but it can take some time. Again, it's a fluid situation. I was on a plane yesterday heading to South America, and I was checked in. I sat on my seat, and 15 minutes later, I was off the plane because all flights were canceled. So nothing I expected, and that's the way it is in this market. You just don't know what's going to happen next. You don't know what the effect is going to be. You don't know what's going to next shoot or drop. So in that particular case, and like this morning, we opened up a limit down. So my advice to you is just to stay tuned, but stay out. That's the best thing. All right, take care, and hopefully it'll straighten out a little bit more this week, and we can have better news for you. Take care.